All right, how's it going, everyone? Richard here, and welcome to Monday's Morning Bell. Guys, I do have to apologize before we start today's session. I could not stream on Friday. I was involved in a near collision road accident. Happened right in front of me, and luckily I was able to avoid it, but I did aggravate a little bit of a old back problem that I do have. So I spent most of Friday and this weekend horizontal in bed, but things are looking up a little bit better today. So yeah, I do apologize if you were new to these services and you missed out, or I not missed out and you arrived, but I wasn't there. So I do apologize for that. Guys, I see there's quite a lot of new guys in the room today. So if you guys got any questions, please feel free to drop them there in the chat box, and I'll be more than happy to answer them for you. Right, with that being said, let's quickly look at today's economic calendar. We already had the Empire State Manufacturing Index figures released 15 minutes ago, a little bit worse than forecasted, and I think for the remaining of the week, from a high impact economic news sort of perspective, relatively quiet for the US. We're going to fully Fed manufacturing index figures on Thursday, and that's around about it. I think all eyes, this is now after last week's inflation data, that all investors' eyes will mostly be on the big companies that's reporting their earnings this week. I believe, who was it? IBM, Netflix, Goldman Sachs. Who was the other one? Tesla and P&G. I think they're the big ones this week. They're releasing their earnings figures. So I think all eyes will be looking at that. You know, if all these companies are going to report really good figures, then it's like I said before, good news is bad news these days, especially with inflation being high. If the economy is going to start slowing down, I mean, the job market's definitely not slowing down at the moment. So this is all prompting the Fed to continuously raise the interest rates. So I think the next interest rate decision is, gosh, I can't even remember. Is it next month? But anyways, they're reckoning another 90 or 75 basis points, not ruling out potentially a full percentage basis point rate hike there. So whether the markets are factored that are in or not remains to be seen. Anyway, that's what's ahead on the calendar for this week. As always, we're going to look at the ES first. We're also going to have a look at the NQ, crude oil, gold, and the dollar index. All right. I'm sorry, guys. I'm just monitoring. There's something happening with live stream on YouTube. It does seem to work okay now. Anyways. Right, guys. So the ES has hit this support zone that we identified beforehand. The upper limit of that zone was round about where this low red warning line is of this pitchfork that we've been using, that's been tracking or been confining price extremely well to the downside since this move that started in Jan this year. All right, we've had a previous instance, this little green box over here, where price reached this red warning line. There was also confluence with a cent median line, which is this purple line that we also had on our chart for a very long time, right? So normally when you see an area where there's confluence between different angled market geometry lines, quite often it acts as good support or resistance, in this case support. Strong bounce to the upside. At that stage we thought that potentially that this might have been the end of a corrective move, and the June time frame that price was going to go to new highs. That failed. We also identified a resistance zone, and price failed to break above that. So this is just a really good indication of whenever you see different angles of market geometry where they have a confluence area that quite often, in this case again, now acted as resistance. We had a strong breakout downwards, pull back to this cent median line rejection, also previous lows, same area, and bam, straight down. Now then, when was this? A couple of weeks back, beginning of October, we were saying that we potentially were seeing a expanding triangle, which are these orange lines. I will zoom into a 4 hour in just a moment, but I'm just trying to recap what we've been looking at in the past couple of weeks. I said price just failed to reach this low red warning line again, where it did previously. Look what happened, strong bounce to the upside. So this was last week, Thursday, right? Price eventually moved into that support zone. We had a strong bounce back to the upside. I think we were looking at 3,703.25 to the lower end, 3,682-ish as a potential area for resistance. And how we got that last time, oh gosh, now I'm moving this, hang on. I have to update it anyway. Anyway, it was something like that. This is what I wanted to do. I wanted to open this box a little bit bigger. Price pulled into that area and got rejected again. Why did it get rejected? Well, if it's the market geometry or not, who knows? But in any case, it was another confluence between a median line sloping downwards and then that center median line, this purple one from where price previously bounced higher. I did say watch out for potential retest of that area, what we call a kiss goodbye. And then on Friday, strong rejection back to the downside. So where are we going now? And we've been waiting for price to hit the support area for quite some time now. So now I'm sort of a little bit neutral. I mean, been bearish for quite a while until price would hit this area. And the overall picture, before I go to 4 hour, if you're new to the analysis sessions that I'll be doing here, I was saying that I still think that we're potentially not done with the corrective move moving lower. We thought at the end of June that that was the end of a correction, but obviously, like I mentioned before, it failed. Now price retested that line, bounced higher. Now it's the ES is basically stuck between a rock and a hard place in the form of this lower zone up here and then this upper resistance zone on the upside. Right, so either one of these that's going to get broken will then, I think, give me directional bias, let's say over the next week or maybe for the remainder of the month. Currently price is rallying a little bit, about 50% retraced of Friday's drop that we've seen from that resistance area. So it's really important for me now to basically, I would personally just be on the sidelines here and wait for either one of these zones to be breached. A break above this area, and I think there's a good decent chance that price might pull back into the center median line of this downward sloping pitchfork. I will label that for you. Above today's current candle around 3,820. That's if we break and close above this area. If we break below this area, we have a 50% retracement that's not been reached just yet. And that 50% retracements from the strong move from the low that started in March 2020 to the high in Jan this year. Previously, a little bit of undershot underneath the 38.2, back to the upside. 50% nearly been reached, but not 100%. I mean, these lines don't really, on the flip side of things, need to be reached. But, you know, it's still a possibility that price might be drawn towards that. Now, before we look at the NQ, in the bigger scheme of things, I still think that this is an incomplete corrective move, although I do think at some stage we could see a potential bounce to the upside. So what I mean by corrective move is that this entire thing looks to me like a potential WX incomplete Y wave, i.e. a double zigzag that is still underway. What I mean by that, if you're unfamiliar with this, is that this was potential an A, a B, a C into this area. Then we had a WX, which was an expanded flat, this move over here. And that we potentially now busy with the first A wave, a B wave to follow, and then a final C wave to complete this Y. Could potentially be done, but a little bit small in my opinion. It doesn't look like a nice clean ABC. He did, however, reach this lower red warning line, but there is, I think, in my opinion, potential for deeper retracement. I.e. that even if we do get a bounce here, that we'll get a lot of people pulled into this, thinking that that might be the end of us. Everyone's getting happy. We see a move potentially retracing a decent part of this previous decline. like we've seen similar before. Nice strong bounces, and then immediately met by like a V-shaped top, inverted V-shaped top, and bam, you get a strong decline again. And if that does happen, then, and let's say it happens from here, I'm not saying is, but if it does happen from here, I'm gonna still see this as that first A wave of the secondary ABC, meaning that, just draw that again, that I'm still waiting for something like this, and then complete, and then move to new highs. All right, so again, in the bigger picture of things, we just need to be mindful that, I mean, there's a lot of talk always in the media about recession and how terrible it is, but to be honest with you, yeah, inflation's at record highs, things does look terrible, but you can very quickly get sucked into bad news, because the bad news sells, right? Obviously the economy is going to start taking blows and hits and all that sort of stuff. Food's more expensive, fuel's more expensive, but in the bigger scheme of things, I mean, we haven't even retraced 50% almost, but not yet, of this massive move to the sounds upside. So still seeing this as corrective in nature. That's all I really wanted to say there. Okay. Yeah, let's quickly look at the 4 hour, and then we'll switch to the NQ and then crude oil. Right, so last week we were saying potentially we were seeing a expanding triangle, and we were sort of thinking that around about this time frame. When was this? Or this date, should we say? Yeah, on the 3rd of October. Price moved lower and start vibrating up and below what we call vibrationing above and below a median line, which is this dotted line. Hopefully you can see that. Guys, if you're new to the service, I do apologize for all these lines, but I'm still trying to find a way to clear things up. But if you attend these sessions more often than not, then I think you should have a good grasp of what I'm trying to say here. So what I've said on, when was this, around the 3rd of October, is that I thought, obviously for once I was right about things, A, B, C, a D, and an E wave. We have the rejection and a strong move back to the downside. Now quite often you get triangles, whether they're expanding, symmetrical, ascending, descending. They quite often tend to appear in the fourth waves. And what I mean by that is that potentially that this was some sort of maybe a 1, a 2, a 3, a fourth wave expanding triangle with a fifth wave lower to complete that A, and that we now could potentially see a B wave move to the upside. And I think if we do get a B wave in the bigger scheme of things, that it could mean that that bounce could be quite significant and could retrace a decent portion of this drop to the downside. But for that, like I said, price need to overcome here or break below, reach this area sooner rather than later, but we'll have to wait and see. From that high to this low, I mean, at least 50%, maybe even a 61.8, maybe even all the way back to this upper median line that's sloping to the downside. Right, so a little bit on the sidelines here. I would like to see price break either above or below that support zone and that resistance zone. So it's sort of like hovering slightly in the middle between the two, right? All right, so, but like I said, on the near term, let's just get rid of these fib lines over here. See a break above this resistance zone, potentially you could see a move to retest this market geometry line. So price tends to bounce between these lines. They're like almost drawn towards them like magnets, and they make really good targets as well. But like I said, a break and a close above this, potentially that's where we could see. And I think at that stage, if we break this high where this low median line is, that I'm going to start citing that we've potentially seen that secondary A wave complete and anticipating a much higher move for B wave. Okay, dokes, that was the ES. A mouthful. Hopefully you understand what I'm talking about there. Again, if not, guys, please do drop any questions you might have in the chat there. This brings me to the NQ. Nasdaq. And the Nasdaq is always loading slowly for me for some reason. Today it looks okay. Anyway, we had a pitchfork sloping to the upside, these purple lines here. They've been working really well, even though it's sloping upwards and price was moving downwards on the NQ. But here's also a beautiful, perfect example of where we had a pitchfork sloping similar to the ES to the downside, a shift pitchfork setting. I love using the shift pitchfork setting, especially if I think we're dealing with a correction. Price hit it to the T. We also had an upward sloping market geometry line. Beautiful cross exactly where price reached and moved back to the upside. Similar to the ES, we had a resistance zone that was broken. Also, yeah, it was resistance, it became support slightly and it got broken. But we also identified an area up here, and this red line you're seeing here is the automatic MACD divergence indicator we have here at Ninjacators. Quite often they're more significant for me when you actually see divergences at areas of market geometry. So also we identified the zone potential resistance and price moved right into it and got rejected. Pulled back to a median line, got rejected. Pulled back to a median line, got rejected. Now on the NQ, we're stuck now between this lower dash median line and this lower upward sloping median line, which currently on the upper side is 10,973, to the lower side 10,726. But the NQ failed to reach the lower red warning line like it did on the ES and like the NQ did in, what was it, on the 16th of June. So it might still be pulled towards it, although the ES already reached that area, right? Doesn't necessarily have to meet it, but you always get in a little bit of a doubt, you know. If it misses it, is it going to be drawn towards a later stage? Might very well be. So I think if we just keep a good eye on what happens with the ES, if we can break above that resistance zone I've shown you just now and close above it, then we could potentially see another move back towards 11,514, which is this low median line here on the NQ. So sort of a bit stuck in between these two levels. You see a line crossing down, a line crossing up. And that's how I got those levels. But the support area still stands around about 10,418-ish to 10,288 on the lowest side, where price could potentially still move in towards. So keep an eye on both of these lines. I think we can get a break and watch the ES again above that support or above the resistance zone, then potentially we could see that higher bounce potentially in the NQ as well. And this brings me to crude oil, guys. I'm switching to the December contract already. I haven't checked the volume just yet. The November contract might still have quite a bit of volume, but anyways, I switched to the December contract. I had to slightly change the market geometry on here, just because what we call contract month displacement when you do drawings especially, and also sometimes happen if you move between time frames. I call market geometry time frame displacement. So what that basically means in layman's terms is that if you do drawings on one contract or on one time frame, it looks like it could shift sometimes on a different time frame. So if you do a drawing on a weekly, they might shift if you go onto a 4-hour chart, for example. In any case, these lines I had from that low when crude oil went negative in April 2020 to a low in December 2021 to a high in March 2021 gives me the width of this channel, and then double that up and you can see our price failed to break the upper side of that area of the channel line, that blue line it is. And I'll keep these lines on my chart for a very long time until they are finally broken. I mean, it was broken but couldn't close above it. Was broken but didn't stay below it, and I'm still of the opinion that we potentially here seen, come on now, a 1, 2, 3, 4, 5 move right into an area we identified before, and also a beautiful example of where we had a lower median line and an upward sloping channel line, a different market geometry line where price moved into, and we had a rejection to the upside. Now I still have the drawings on my November contract, so I can just show you that. Let's give that a quick few seconds to load. Hopefully it doesn't load too long. Come on now. Here we go. You see that area here? Way more defined. On the December contract, it looks like it came way lower, but on the November contract, the contract we were watching, it moved picture perfectly into that zone and got rejected to the upside. We said that we had a 1, 2, 3, 4, 5 wave move to the downside, and that in combination, the pattern looks still to me like a leading diagonal. And not an ending diagonal. So that for me means, yeah, I might be wrong obviously, that we could see a much higher move here that retrace a decent portion of this and then see another decline to the downside. So we managed to catch this area really nicely, identify it at a strong bounce to the upside. I just want to switch back to the December contract now. And here's another great example. Even though I had these blue lines on my chart for probably more than a year and a half, you can see how well they act as support and resistance again. We identified this zone last week or the week before even, expecting a move to the upside that was reached pretty easily, but it got rejected again as soon as price moved into that zone. So now the question is, if we're going to make a deeper retracement to the upside, then what did we see right now? I think we have to move to a 4-hour chart for that before I label that. And what I'm thinking is that we've seen a 1, a 2, and then 5 for a third wave. 1, 2, 3, 4, and that high is actually a little bit higher. 3, and that this is potentially a 4th wave correction, and we're going to get potentially another move higher back into that zone. And that could then potentially just be the first 5 waves and then a correction and then a much larger move that could probably mimic this first move in range to the upside, if that makes sense. So I'm viewing, in short, this as corrective. I have to look at a potential area of support. This could have been the end of a corrective move. If this is a 4th wave correction, we don't want to see price move lower than this area. And let me just hide that for now. We don't want to see price move lower than 78.50. 4th wave corrections generally don't pull back that deep. They tend to like the 38.2 and 50% retracement levels, measured from your proposed 2nd wave low, in this case upwards for a bullish scenario, to your 3rd wave high. So already hit the 50%. We can still hit the 61.8 and potentially even move lower towards this lower median line again, potentially reaching this area over there. Let me just change that to green. Drop some labels there. I think it would, at the very least reach a 61.8. But anyway, let's give it a little bit of a wide berth over there. Upper limit 82.50, lower limit 81.7-ish. We'll have to update this probably by Wednesday if price continues moving lower. But that could also be the end of corrective move. Here we just have this 50% dash median line, this green one over here. Let me just get rid of that quickly. See this line over here? That act as support. It might act as resistance now again. So for me to say with a bit of a higher level of confidence that if this is a correction, that it has properly ended, price would need to break and stay above that line at 86.05. But what I would really like to see is price break above this upper channel line to confirm that the end of corrective move is probably in, and that we potentially see at least another move to test these highs that was set last week. Okay, that's crude oil. Let's have a look at gold. How are we doing for time there? We still have some time left. Here we go. Let's just go back to the daily. All right, guys, so in gold, we also said last week that, and actually for a couple of weeks now, we've had this pitchfork and a larger pitchfork sloping, one sloping sort of a bit sideways from the three major anchor points prior to this decline. We had support step in at this low white line before, got rejected, moved up and broke below it again. But we also had this green shift pitchfork using those anchor points, the first three ones, most prominent ones, and we had support at the low red warning line, support at the center median line. Come on now. Bear with me, guys. Trying to zoom in here as best as I can. So, good example of where price overshoots the center median line, and it does so again the next time by the same distance. That happens quite often. So if you run a ray, same angle, projected from one of those highs, it did exactly the same overshoot the next time around, got rejected to downside. Anyways, I'm going to just delete that for now so you can see what I'm saying here. I'm still of the opinion that this entire move is corrective in nature. Since these highs that started in October, was this August 2020. And I think still that we've been seeing some sort of an ABC, and that we're now seeing a 1, 2, a 3, a 4, and a fifth wave that's running as an ending diagonal that's not done yet. So this entire shape to the downside, corrective in nature still, in my opinion. Don't think it's over just yet. We did say that we were expecting potentially another move down to the downside in 5 waves, a 1, a 2, a 3, a 4. Price reach an area we identified to the T. When was this? A couple of weeks back. Yeah. Again, beautiful sort of ways that you could find these resistance zones before price reaches it, and we've seen a rejection, and I think that we might see another move to the downside, could potentially reach 1,615 to the lower limit 1,587 to potentially complete that final fifth wave of an ending diagonal, and then potentially see a move to the upside. Now for that to happen, I won't even get too excited. If we do see a move up, I would then like to see price break above. Let me just make this thicker so it stands out a bit better. In this case, in a bearish scenario, break above the upper trend line of a potential ending diagonal, and then only then I'll get my hopes up that a potential ending diagonal has ended. But it'd be cool to see if price can still first move into this area. Thus far, it has been following our projection lower. Right, guys, I think that's all we have time for today. I'll look at the dollar index for you guys on Wednesday. Again, welcome to all the new guys that's in here today. Thanks very much for attending. If you're watching this from YouTube, or if you're late next time, or you couldn't watch it live, is what I really want to say, then there's a link in the description as well. gives you a bit of an overview as well as timestamps for the YouTube video if you want to watch it afterwards on our channel, Ninjacators YouTube channel. All right, everyone, thanks very much for watching. And again, as always, have a good, fantastic rest of your day. And I'll see you all again on Wednesday. Until next time, take care and goodbye.